but I want to show you real money. This isn't demo. This isn't a stat account. And this video may actually, I put the MNQ because I know the NQ got a lot of movement. 12:23 a.m. Eastern time right now. So what I'm going to do though is to kind of show you the strength of the I'm going to go ahead and I'm going to turn off the colors to my candles, body and borders and wicks. Okay, so now I am relying on a couple things. Oh, wait a minute, I also want to turn off the bid and ask, and I want to turn off the high and low. Let's turn off the previous closed last. I think that should be enough things to turn off, right? That's enough things to turn off. That's a pretty good, now these are the, this is your VWAP. These are your standard deviations from the VWAP. And our training videos explain how that works. And so those are basically for targets. Those are targets, and if the price, when I'm looking at a entry signal, I will consider where I am in relationship to any of these levels, just because if you get a signal up in here and it says go long, you can feel free to go long. If you get a signal right here and it says go long, it might be short-lived. Now it might, based on the rest of the, obviously you're going to have some market structure. You're going to know, which are you in the small move, are you in the test move, are you in the institutional move, or are you in the dumb money move? And actually, that's the bait. That's the bait. Are you ranging? If you're ranging just right here, you've been ranging, right in through here, and then you get a signal. I'm gonna say, there's enough money on this table that you can pretty much wait to get a little bit out. You need to break the range. But these are all things that we'll go over in our strategy videos in some detail. Obviously, we also have mentoring. And I'm also going to do one thing here. Let's do this here because I want to be able to have my take profit and stop loss already on market. Okay, so once we enter a trade, I'll go ahead and shrink this so we get more space on the video on the screen. But let's just look at this. I don't even know. Let's just do this while we're waiting, because I do definitely want to see you. And the thing is, I don't know exactly when we're going to get a trade. Obviously, if I could do this in a different time of day, I would get more opportunity. But look, so that was a primary signal to the upside right there. Okay, so I'm going to put primary signal there. This is a primary signal to the downside, so I'm going to put that there. And let's see what we got here. Downside, 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 downside. Now if you notice, sometimes these candles, the primary, which is the dot, sometimes these primaries are painted at the same time as the column, when the column is a secondary signal. So we're going to take the primary direction. Let's be green. We're going to take the primary direction, and we're gonna run with that. Now listen, let me just say one thing. This is not 100%, and no one ever said it was gonna be 100%. Now we believe you'll be profitable if you use the strategy. We believe you'll be profitable. You'll be in statistically winning percentages. 60, 70, 80, 90%. I've it's not uncommon for me to run 5, 6, 7, up to I think the most I've done is 19 days with 100% trade accuracy, and my variables on trades, are anywhere from 10 or 15 entries to 36 entries to 54 entries with 100% win-loss ratio. And then the winners are bigger than the losers. We have a primary signal to the downside, then we also have a secondary signal. So let's put a secondary here. So I'm going to go ahead and say the dashed line is a secondary, right? We'll go ahead and make that blue just because it's where the secondary is. And I'm going to turn on these, bring these candle bodies back. However, just keep in mind also primary there. So we'll do this, and then we'll go primary. Well, let's put the primary here, green, and then we'll put another primary. So we can see that there's I'll figure out how to paint that out better. And then here, what do we got? Secondary and secondary. All right. So I believe that here shortly we'll get a move to the upside. But in the meantime, we'll close this. We'll open this, and we'll add back our colors, our handles, and we'll see how it looks. Body, border, wick. All right, that was just random. I was like, what? Literally, there's no. We'll take that away. There was actually, I don't know why I put that there. All right, so we'll just start over here. We had a primary signal here to the downside. We had a secondary signal to the upside, and I'll explain how the signals work in a minute. But right now we're just going to figure out predominantly which one is stronger, and also demonstrate that we didn't use the candles. We didn't need the candles. Do this right here so we can get a little better. Especially on these smaller candles, it'll be good to. We're just going to hide the VWAP for a second so we can get some of that noise out of the way. All right, so we started here. We had a sell signal primary, and then we had a sell signal secondary, and we had a nice sell. Okay, that signal came in somewhere right about. So I had one new user questioning whether it's supposed to match the color of the candle to the signal, and I said that often that's not the case, and in fact this was a green candle, but the signal was red, primary signal, secondary signal was red. So we were also on, obviously, these candles being a doji, they alternated when it was up or down. These flickered back and forth. So what we were entering over here, okay, we entered here. We had a little bit of a pullback against our position. We entered short and we went against it, and we went up some. But let's just say we entered here at this center spot at 525.50, and then we got a buy signal at 455.25. So what is that, like 100 ticks? 100 point, yeah, so that was good, right? That was good. Then we come over here and we got a primary buy signal. We were still in a candle, so let's just say that they got that signal at 465.75, right? Just right here in the middle of the Heikinashi. And then it did go down to, what was that? 65. Yeah, 65.25. It went down to 60, so it went down a little bit of pullback, okay, and then it pulled back some more. We had 448, so 12, 15 ticks, whatever, it went against us, and then we got another primary signal to the upside, kind of confirming that even though we're getting pullbacks, we're getting a divergence, okay. This is showing a divergence, but you're not looking for divergence. You're just looking for green or red dots. All right, and you can do it with or without the candles. I drew these lines without the candles. You saw me do it. Okay, so this is, listen. I was hoping to be able to trade without this, so you could see our tick count gaining in real time, but you know, it's not a good volume time. It would have been better if I had come in here a few minutes back. But at any rate, you know, actually, no, this is a 10-minute candle. So if I came and sat down and done this an hour ago, we would have went from this primary signal at 451.50, and we would have seen 426. So about 25 ticks going that direction, or so. Actually, those aren't ticks; those are points. Those are 25. That's 25 points. I don't trade the NQ or the MNQ anymore, or the ES. I'm actually not a real fan of the NQ. You know, typically I trade on shorter time frames, and there's a lot of whip in this. You know that if you're an NQ trader. I like oil. I love crude oil futures. But that being said, let's go back over here. We're green here. And that led us into this monster move, right? Okay, let us right these 1, 2, 3, 4 green signals primary plus a secondary signal took us as high, took us way up here. But if we went to just signal to signal at this point in time, we're in this run, and we see this secondary. Okay, a secondary is now out of a break of one direction or another. I will take a secondary or a primary as my reversal. Okay, that's a big point, secondary and primary, and then we run down on a secondary signal. We run into a primary signal to the downside, a secondary signal to the downside, a primary signal to the downside. Oh no! Look at that. There. I'm sorry, I missed that. Look at that. Okay, hold on. There is a primary to the upside. Right there. We had a primary to the downside. So in this case, you did get a little. You had, I'm sure if you drew this down into a 2-minute or a 1-minute, you probably, looked like a two-sided comb. Right in through here, so you might have gotten pulled out there for a small loss, but then you went back to a primary buy, so you jumped out, and then you got a win that basically, that definitely would have overcompensated for whatever loss you might have gotten in here. So you had this giant move here. You had this giant move here. You had this really, really good move here into potentially a small loss. You probably lost right in here, and then you grabbed up and whatever that was, you tripled or quadrupled that into this here. And then bam, there's our secondary signal down in here. Now listen, we went from we were in a sell, and we got the primary sell. And then we got a secondary. So this is a discretionary thing, but so if I'm moving out of, if I'm in a move and I'm taking the move, and then I see an alternate primary or secondary, doesn't matter. I want to take that. However, in this case, I dropped the primary, so in that case, I'm going to go ahead and hold because the primary takes precedence over the secondary. So I'm going to hold. Now that's not going to be comfortable. It's not going to be comfortable. But as you can see, that primary led us into this move here. Okay, so that's what we have here. We got a secondary out of a primary. So we take the secondary and we exit. Maybe you don't enter necessarily on that secondary. You can if you want to. You can, and listen, all these moves are discretionary. You don't have to do this. You can do something else. This is just our system that we're putting out there, and we're saying, hey, this works for us. If you master it, then it potentially could work for you. That being said, obviously, I can't give financial advice. Trading is risky. Don't trade with money that you can't afford to lose. Everything I'm saying is hypothetical. what else? What else? You know, all of those disclaimers. Okay, past performance doesn't indicate or influence future results, and your trading results might be different than my trading results. All that being said, we're looking at this system here and how well the system works. Okay, but here we got this primary, we got the secondary primary out of the move, so we're exiting this move, and then maybe possibly entering. If we do, we grab from here. Well, then we get the primary, we grab from here, we go up here, we get a secondary. Secondary always takes you out of a move, okay, unless it is overrode by a primary, obviously. So now we're in or out. We're either out and took the short, or we're just out. We get a move. It's not the biggest move, you know, 63 to 49, so you know, seven points, and then we get a secondary. So that secondary exits us out of the move that we're in, and then we either accept that and stay with it and make a small gain, or we just wait till we see an actual primary, and we take that primary to the downside. We got the primary, and then we have here's the thing. We got caught a little bit. It's a little choppy. I'll be honest with you. If I saw this choppy going on, I saw this plateau, this small, it's the movement, it's just not happening, and then I get this small move and I'm chopping, I'm actually going to wait personally until, you know, these are 10 minutes, this is a few hours. I'm going to go, you know, watch a movie, I'm going to play ball with my grandkids, I'm going to do something other than to trade in here, but if I have to make the move, that primary is the move, so I take it and I go down here. This primary to the upside is the actual move. As you can see, the next candle turns green. Primary to the downside, so now you're here. This primary moves fine. Primary to the downside, so we're still in the downside move. We're going until we go here. We got a primary to the upside, and then that technically was the first time. Here's another primary to the upside, but again, nothing really going on. You know, I'm not sure. This potentially a break even, potentially a small loss of a couple points. Now we have a secondary, and we have some movement, obviously. So we're going to take that. We get nothing here. Okay, we get nothing here, and that's just mathematically, you're going to have those things occasionally. So we're going to call, if we entered, where do we enter? We entered here to the downside, and then we didn't actually get a signal. We got a pullback, but then so we entered here for the downside, and then we stayed in because we had a primary, and then we stayed in because we had a secondary, and then we got this move. Now listen, I'm reminding you that I went on the signal system. That's it. That's the only thing I looked at. I didn't look at support and resistance. I didn't look at a MACD. I didn't look at any moving averages. I didn't look at the candles. I didn't look at market structure. I looked at these dots. I turned off the candles. I marked them, the lines, so they extended down so we could see where they did, and then I turned back on the candles so that you could see, we could validate and verify the accuracy and effectiveness. And I just randomly picked this up, this screen, this chart, in current market conditions. I didn't scroll to find conditions, I just did that. So that's it. You know, if this tool, listen, use it for 60 days. If you get results, fantastic. We'll talk about getting you a longer term license. If you don't get results, you know, I don't know what to say, because I've made dozens of these videos. I trade this way every day. I'm part of a team of traders that trade this way every day. And, you know,